Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone gliding, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market had an historic week last week, plunging in panic over the coronavirus, which was a trigger for a financial crisis. If you think it's a medical crisis, well, that's true. But this exposed the massive risk created by the central bank involvement in the markets for 2 decades. And with the Fed plowing in $1.5 trillion in the last couple of days to stabilize markets, you know how bad it is. The implosion started on Monday. Well, that seems like a year ago. OPEC collapsed, and the Saudis said they were going to raise their oil production. That all happened because Russia said they were not on board with more cuts of production, and oil went into a massive decline. It traded as low as $27.34 a barrel and ended up losing about a third of its value on the day because of what is now a price war. Of course, historically, the Saudis did want to take on the U.S. production of oil shale and try to push prices down at some point to hurt those companies and try to get back command of the oil production around the world. But that certainly hadn't worked, and when oil is popping over $60 a barrel or so, those oil producers are very profitable. And now with these oil producers very unprofitable, we have chaos here, especially in the oil shale sector. Those stocks at $32 a barrel, approximately where we are right now, lose money, and of course they are massively indebted. And that's one of the reasons we see the high yield market absolutely collapsing in here. And that started to break down just a little while ago, and we pointed that out, that was a risk. So we saw this all start on Monday. Futures at that point for the indexes started a series of limit moves and circuit breakers getting hit. And I got to tell you, that causes panic. When you have a situation where traders can't trade because these rules lock up the markets, then they look for anything to possibly do to hedge off positions. That sent the 30-year bond to 193, pushing it down to 0.84 yield. That was panic buying in the bonds because they could not sell stocks. They could not sell indexes, so they did anything. And what kind of protection do you get at 193 in the 30-year bonds? Well, almost nothing. But you get forced to do stupid things, and while the government tries to put in rules to protect us, they often hurt us. And this is a good example of that. There should be no circuit breakers in the market at all. The market should just simply be allowed to trade. But they didn't allow that because they put in these rules long ago, and that causes these limit moves as we go right for the limits, of course, and panicky situations. Ends up that Monday, that decline was a record loss for the Dow in points. 2,000 points to the downside, and we saw the 10 years at a panic low level of yield at about 0.4%. That was just incredible. Tuesday, then President Trump came out and promised stimulus, and he, of course, wants to pump the markets because he has an election coming, and many people out there just say that, if he doesn't have the economy, what does he have? And that sends futures up limit overnight. Huge volatility, though, on that day as Pelosi came out, and it appears that she was saying that she would not meet with the president on stimulus, and the market moved to the downside from a limit up condition. Then the president promised that he would have a presser and talk about what he was going to do to help the markets. And Mnuchin came out and said there was bipartisan agreement that it was important. There was urgency to do something to stimulate the markets. And the Dow ended the day Tuesday up 1,137 points. Wednesday, the Bank of England cuts overnight, and there was no news of any kind of a presidential presser, so the markets turned south again. And with news coming out that the lawmakers were not in line with the stimulus that would come from a payroll tax cut, the market just got sold again. And add to that, WHO declaring it a pandemic, WHO, well, they took a long time to do that, didn't they? We're in 102 countries now of the coronavirus. But the president came out and said he may use the SPR to prop up oil. Well, that, of course, gives some energy to the buyers, again, as they think that the saving the oil market would help things, and markets moved up. But the president coming out and saying he would use the SPR to prop up oil, I mean, shades of FDR that extended the Great Depression because he would not let prices fall. And when you won't let the markets trade to where they should, you're going to extend problems. And that's something we really have to consider as we enter into a period of severe economic turmoil in this country. I've said time and again that the government should stand aside and just let this sort out. Thursday, the president finally scheduled his press conference for that evening, and the markets liked the idea that he was going to come out and say something. And when he finally did, he banned travel to Europe, to and from Europe. And while the market was considering that there could be some stimulus program coming out in that press conference, well, that did not happen. Futures immediately went limit down on that disappointment, and the market collapsed for the day as it continued to get sold. A 10% drop on the day. The Fed then that day does come out and say they're adding $1.5 trillion in what is really quantitative easing to stop what is a liquidity crisis going on. Of course, the liquidity crisis is because they put so much debt into the market that the market can't handle it all, and that, well, I've got so much more to say about this. That decline, percentage-wise, for the market, 10%, was the biggest since 1987. Friday, bargain hunting comes in, Mnuchin comes out, and he says he sees this economic hit as short-term, and the S&Ps go limit up, pre-opening, get up like 160 points, and then begin to falter, give up most of the gain, and now at midday, as I am doing this show, they're up about 3.5%, 85 points to the upside, as there's a bit of a bargain hunting relief rally going on. Again, Mnuchin said he sees this as a short-term hit to the economy. I say Mnuchin is wrong. This is not a short-term hit, and I want you to watch the special that I produced yesterday on Thursday, where I look at the big picture of the market and major cycles, and actually look back all the way to the for what they call the Forgotten Depression in 1920-21. You must see this. This is a watch video. You need to be a level 2, 3, or 4 member to watch that video. So if you're not, please do subscribe. In there, I talk about what I said 4 weeks ago, which was that there was a top coming, and I showed 5 other secular bull-bear cycles and said that this was a setup for something similar. And the bottom line is that the recoveries that I think we're going to have in the market are going to be relief bounces. I think there are some coming, and they're going to last a number of weeks. But I think this is a very long, painful period ahead for the economy and for the stock market, which I think does not bottom for many months out there. You must watch this video. I give you the details of that, so please do become a level 2, 3, or 4 member to watch that. For the week right now, and I say right now because things change fast, stock market is down about 14%. The Dow's worst week in history, if you're wondering about that, was in 2008. It lost 18.15%. We seem like we're getting close. Maybe we're saved here. Saved? Well, hardly. The bond market, the movement in there was just unbelievable. Panic on the upside to massive selling on the downside. The 30-year loses 2 points on the week. Like, big deal, right? But it's 15 points off of its high. 30-year yields right now at 1.52% versus a low of 0.83%. That was the entire yield curve under 0.83%. The 10-year yields now at 0.92% versus a low of 0.398, just under 0.4%. And I got to tell you that was a panic situation, though we have some tests of those likely coming down the road. It was not long ago, just a matter of months, that I said we were going to get sub 1% yields, and here they are, just absolutely incredible. What we have going on is a flight to cash. When you go into periods of deflation or a flight to cash where investors have to liquidate everything because there's margin calls or because they're so scared of what's going on, then nothing gets saved. Gold is not a flight to safety under those conditions. I warned on silver several weeks ago. I warned on gold that it might make it up to 1735, but it only got up to 1704 before it had a huge reversal. And now we're in corrective mode, I think, until May. Gold loses about $112 on the week at this moment, though that is changing also. And silver loses 12.5%, down $2.15, and very significantly off the highs when we warned on those also. The dollar, absolutely wild, and I got to tell you, it's been an analytical nightmare for me in the dollar, as there was a huge panic out of the dollar. It has a massive breakdown and a big top looking like it's formed, but then as interest rates spike back to the upside, the dollar then follows it as money again begins to flow towards the dollar, because the difference in yields between the rest of the world and the U.S. at this point makes it favorable. So then you start to get the carry trades. They borrow elsewhere, bring the money in here. Well, it's not saving the stock market and it's not saving the bond market as they're moving down together. And that's very interesting because this big spike in yields might be a declaration of the end of the 40-year bull in the bond market. That very well that top I think is going to be formed between now and June or July. And then after that, because of all of the massive printing that these central banks have to do, and especially our government, that we might be seeing the bond market price in an inflationary scenario. Or a massive demand for capital that people will pay any amount, any interest rate to get money. Those are situations in very bad economies, and that situation could be setting up here. Our government will print to do anything. They certainly can't lower rates a lot more. We're going to see them come down to 0.75 or 0.5 probably next week. But there's not a lot more that they can do there. All they can do is print or jawbone. Those are the two things that they have, unless they somehow pass qualitative easing, which means that they could go the route of Japan to buy up all the assets, ETFs and all that. I talk about ETFs in that show on Thursday, and that we are in an ETF bubble that just burst. Oil loses $9.50 on the week, or about 23%, and OPEC is gone. The price war is here, and yes, oil $5 off of its panic low, but that doesn't really matter because they've broken the back of that, and it's going to be a long time before oil prices have enough economic demand out there to be able to see a significant rise in the market. I'll talk about it in the short-term view when we do look at those charts, and I give you the sum of the evidence on these five major markets. So that is the opening of the show. And we're going to now go over and we're going to look at something a little bit different as we switch over to our Investor Pulse. What I'm going to use right now is the Slimulator Momentum Tracker, because what I want to do is I want to bring this up and I want to do a little analysis for you. This is the Slimulator Momentum Tracker. All of our premium members get this from level 1 all the way up through level 4. It's an amazing piece of work. And what I want to do right now is just show you the condition of the market. I have this right now set on I'm just going to resume this feed for a second so you can see, set right now to the S&P 500. There are many watch lists in here, and we'll be adding more. You could look up single symbols, but I want to stay on the S&P 500 for the moment so that you can see. And we're on directional bias ratio right over here, which means that this pie chart, and it's now updating right there, so I'm just going to pause that feed so it doesn't do it while we're looking at it. This pie chart right there shows you that where we are right now, and this is live, updating regularly, is that the directional bias on these 500 stocks has only 2% of them bullish. Only 2% of them have setups in momentum that are rising. There are 70% in there that are negative. You know, when you think about it, the stocks that have been able to stay in momentum that was positive, well, those stocks are probably stocks you just can't break. And you probably want to know who those are. I'm going to identify them. I'm just going to go into the long term right over here, and I'm going to sort on that. I'm clicking that up arrow, down arrow. And any of these that are in long-term momentum that are green are stocks that are almost unbreakable. And you probably want to know which those are, and I'll show you that right over here by just scrolling down a little bit. You have ABBV, you can see that, ALB, you have BIIB, another biotech, Crown Castle International, CCI, Clorox, you know, that's often a stock that is that investors like to hide in. And you can see right over here, that's actually on the intermediate still positive, so good momentum condition right in there. And also, let me just scroll down a little bit more in here. You can see Digital Realty Trust, that's DLR. We have, just scroll too far. DaVita, DVA, Gilead, another one of these stocks that's in the biotech category. Kroger, you can see those green. You have the short terms are intermediate. Eli Lilly is another one that's really good in the drug. Newmont has been weakening in here. Now, it's slightly bullish, you can see that, but I'm a little curious whether that one is going to break down the way gold is. Netflix, that one's still unbreakable because, well, it's gone down, but the long-term conditions are still good. So these are stocks you can't break. NVIDIA, Regeneron, SBAC, that's SBA Communications, STI, Tiffany. Wow, what do they want? Why can't you break that one yet? Well, maybe it will. WellCare Health Plans, look at that. It's green all the way across. And that's the only one I can show you that is that powerful in there. So I just wanted to give you an idea. I'm just going to resume that feed so we can go into the NASDAQ and just give you an idea of what that looks like. So I'm going to put up these 100 stocks in the NASDAQ right there. And I'm going to show you the same thing. You can see only 3% of them have positive directional bias ratio right there on our proprietary formula. 55% of them negative. That is better than the S&P 500. Let's just look at a little sorting in here and look for the green ones. And where are those green ones? Look at that. We have BIB and Celgene. They're really in the same group because there are overlap between the S&P 500. Gilead, JD.com is pretty strong still. There's Netflix again, NVIDIA. So you can see there's an overlap between the S&P 500 and this group. There's Apple for you. You could see it's gone to neutral, and of course that was a massively strong stock. So just wanted to show you this, how weak everything is, and highlight the stocks that are very strong, and I think that really gives you a great idea. So there is so much in here. You can go to single symbol mode and just look up anything you want to. Let's see what happened to IBM as I click on that, and there's IBM red all the way across, you can see, and that's been that way for weeks. So these things are just absolutely amazing. You can scan on important things in here, directional bias or long-term, intermediate, short-term momentum, and as it turned bullish or bearish, it'll show you when. And then in here you can see the dates that things happened. You can see the charts when our signals came out in there, and if we have any notes on anything, that will then be put in there. We're about to add that feature. So this is going to keep getting even better and better. So incredible what we have in here. And you just saw how important it was for me to be able to use this to really get a good sense of the market. You want to be able to know which ones are turning up, which are the strongest, which are the weakest. And of course, you want to be able to put in your own watch list right over here and then add stocks to the watch list so that you can come in and be able to see what's going on in the stocks that you're most interested in. Just absolutely incredible. So I wanted to show this to you, and I hope that you become any premium level member, 1, 2, 3, or 4, and then use the Slimulator. And I think this momentum tracker will be just monumental. It's meant for investors, long-term outlook. You can see that up to three months and out there. So long-term position traders, just an incredibly valuable thing. So I wanted to show that to you. I think it's great. Okay, so that was the Investor Pulse. Now I'm going to do something a little bit different in here. And I'm going to switch over, and I'm going to do a special report on Bitcoin and cryptocurrency. I think this is incredibly important right now to show you. I'm going to bring up my charts right over here, and here is Bitcoin. This is a side-by-side chart looking at the weekly and at the daily. And Bitcoin had a collapse in here a couple days ago. It moved down through the supports and broke. I did a report on this and I did some analysis back in the beginning of the year. And what I said was that I projected that Bitcoin would fall to, well, 5,400 or 3,100. It was a little while ago that I did another report and kind of upgraded it and said, well, it'll probably get down to 5,400 based on the strength I saw, but now there's been an implosion. The point I made back then on February 20th was that there were over 2,000 cryptocurrencies and growing, and the supply is unlimited. It is a bunch of crap that they tell you that there are limited supplies, and this is a false asset. This is not a real asset, and people that have been coming out talking about 50,000 or 100,000, well, I believe that it's been a total farce, and my analysis is proving out in here. So what I want you to see as we look at this is that we have a breakdown, a cyclical breakdown, and I'm going to show you the cycles in here. You could see that important low. There are nested cycles, minor cycle, and a dominant cycle. The minor cycle is coming down and will probably bottom in about a week. What that says to me is that this impulse on the downside, which took it down to almost 4,000, and it's now rebounding, it's going to end soon. And then you get some sort of a false rally. I believe this next decline out over here, which goes into June, will take you down to 3,150, potentially, 3,100, or all the way down here under 1,000, where this fib extension target zone goes. We've had this here for months. This is where we believed it's going, and we think that the cryptocurrency, the whole concept of it is in meltdown right now, and that you're going to see probably 80% or more of the cryptocurrencies out of business and go away. So you might get some relief in here as it attempts to rally maybe in the next few weeks. I think that this is the cryptocurrency implosion going on, and there may be a need for cryptocurrency down the road, but this and Bitcoin may be one of them, but the valuations that got in here were purely speculative. This is another result of the central banks, and specifically our Fed, creating an environment where this could happen, where you could create something out of nothing, and that people would go into debt to buy something that was created out of nothing. And this is the part of the debacle and its flight to cash that's going on, that is exposing the garbage that was created in this economy. You can look at the zombie companies in the Russell that are melting in here. It's the same thing, created by the government, a fictitious valuation, and now unwinding with much lower prices ahead. And let's see, when the dust settles, who's going to rise out as something real. Do not hear this as me saying that blockchain is not valuable. I think it's fantastic, and I think it's going to be basically free to everybody. So it's a way to record or do record keeping that is very different and very easy compared to how it was done in the past. And blockchain is here to stay. And but Bitcoin, and cryptocurrencies which exist on the blockchain technology, well, they're a total farce. And you see them beginning to come apart right now. And I believe this is the beginning of the end of this particular bubble that we saw in here. And of course, bubbles all over the world. But Bitcoin, cryptocurrencies, they were one of them. And it's ending now. And you can see as this falls apart. This break right under here, under this level of about 6,600, is the end of them. Actually, this negative cycle that you see right over here set up the sell zone. It nailed it. And now collapsing under these levels, it's over. And there are much lower prices to come. Of course, when I say those things, I sound almost like it has to happen. It's written in stone. Well, of course, I could be wrong, but so far I have not. And I think what I said makes sense. The end of Bitcoin. It's not the end of me covering it, because I want to be here and talk to you when it's under 3,000. That is that look and our special report on Bitcoin and cryptocurrencies. So now we're going to switch. We're going to talk about our short-term view for the 5 major markets. So like I said, sometimes I'm wrong, right? Well, I had no idea that this was going to be an historic week, starting out with the end of OPEC and collapses in markets like we have right now, and the coronavirus prompting the U.S. to go into shutdown mode. That's what we have going on, which may last months, and certainly a recession coming, if not another depression where you have declines of 10% or more over 2 consecutive quarters. Well, we might not get that deep, but I think it's going to be worse than we saw in 2008-9, and that has set up a volatile condition that gave us ranges last week that were so massive that it's impossible for an analyst to be able to give you anything of certainty when we get into these stages. I'm going to do my best and stay with it and show you the analysis as we begin to look forward. The only thing I get any credit for in here is the gold market, which got close to our upside projection. We thought it had a couple more weeks and then go into correction. Well, it only had a few days before it went into correction. The S&P 500, we thought it would be a wide chop of over a 200-point range, but the range, well, I mean, it was significantly lower than we expected. But we thought there was an intermediate bottom coming, a decline and then an intermediate bottom. But if it got below 28.55, that it was in big trouble, and that proved to be accurate. We're going to give ourselves less than 20% accuracy last week. That was poor. Now let's take a look as we look at the sum of the evidence and look at the short-term view for the next 3 weeks. So we're going to leave Bitcoin right now, and we're going to switch over, not to gold yet. We're going to start out in light crude /CL. There has to be a /. And then we're going to switch this over to the daily chart. So here's your daily chart. We're going to zoom in here so that you can see. Here is your Monday giant gap collapse, the move down to 27.34 overnight. And now we've established a resistance zone. Now, what's important about this is that the intermediate is scheduled to make a bottom, the patterns, and I think it is, basically. No way to know that it was going to happen in that kind of a panic. This was a capitulation, massive record volume going on in here, and now it sets up a resistance zone. So what we're looking for is this chop to the upside to continue. There's a potential there could be some panic selling and, get it back underneath this $30 area for a little bit. But then we think it's going to kind of edge its way up in here to the 37.5 area over the next week or week and a half. Depends a lot on the stock market condition. We don't think the stock market low is in place, and I'm going to show you that. At least we think it'll get tested over the next week or so. So oil might have a hard time, and this might take a little longer. And then you see we have it coming out over here into April. So we think that this bottom is forming. It's just going to trade in this range, maybe high 29s up to this 37.5 area. There's not a lot that we see there is tradable. I much want to talk about the range. Some of the evidence is that the intermediate bottom looks really like it's forming. It's still exceptionally weak. Momentum is negative. Now look where the slim ribbon momentum turned negative right over here. This is so unbelievably valuable. It was negative the whole way right over here, and then turned neutral, and then turned negative right here, and that was at $47. And I'm telling you, the slim ribbon is never going to miss a move like this. Just absolutely the best indicator for momentum you'll ever find, and combine that with the projection oscillator, and you've got gold. I mean, just absolutely fantastic information. Make sure you put the slim ribbon on your Thinkorswim platform. Just fantastic. So that is a look at that. I want to note that somebody wrote me that I haven't answered yet, that wants to produce the slim ribbon for other platforms, and I'm going to take him up on that. So you're out there, I'm still going to answer you, and write me again if you haven't heard from me in the next few days. So light crude, there you go. The next market that we're going to look at right over here is the gold market. The gold market basically has put on a top. You can see that double top that formed right in there, and the confirmation of the double top under this level, under the 1563 area, and it breaks down. Makes a low right over here at 1505-ish, and that right over there sets up a pretty tough condition for the gold market. Now, when I did the analysis and redid my charts this morning, gold was down, but nothing like this. And gold is now down $68. So this is reflective of this panic that's going on in here, where interest rates are moving up again. The dollar is moving up again based on that, and the flight into cash is breaking this in a big way. So this major top, well, intermediate top right over there is not due to bottom until May. So the sum of the evidence is that the rate bounce helps the dollar, hurts the gold market. We think it's temporary, but a correction into May that could get it significantly lower. Right now you can see our projection over here. Well, it got lower than that support from the weekly chart. So we're going to have to redo that and send our members an update in there based on this extreme breakdown. But we warned about gold days ago. We were in a bullish condition of momentum all the way through this, all the way up. Buy signal here, just beautiful. Gets up, makes the double top, and now all of that positive momentum is now gone. It's neutral, and it very quickly will be bearish. So the gold market we're going to call for continued downward chop, attempted rallies that fail, I'm going to need to come in here, and I'm going to need to do some work on where the next support is. This support line showing right over here may be valid, which is at around 1510, which is about where we got to on the downside right over here. So we would, and what I want you to note in here is this is the silver cycle right there, and it joins up on March 27th with the gold cycle. That points to a rebound over here on starting March 27th. That's a pretty weak situation. So what we're looking for is this downtrend to continue in here until that date. So that just says to me that more downward movement, the breakdown is clear, and gold rebounds will come, and they should be sold, because this really looks like it lasts out into May. Right over there, that's the big silver pattern right over there, which points to a decline out into April. So they don't quite match up, but the patterns in here are quite bad. And you can see in there that there's some big supports down over here in the mid 1400s. And I got to tell you, gold could go there, because there's a panic of flight to cash going on right now. That is gold, and it's in bad shape at the moment, as you can see. Next thing we're going to look at is the dollar, which is soaring to the upside. This has been one of the harder things to look at right in here and analyze. It gets right up over here today in this upward, there's a panic buying going on in the dollar based on the interest rate structure at 98.8, 98.82. If it closes up through there, it's going to reestablish an intermediate uptrend. It's going to warn us of that. And if that's the case, then this big cycle right over here that you see may end up to be a very major low, and we could be heading much higher. If interest rates continue to spike up based on the Fed's insanity, based on print, then and huge demand for money because companies are in huge trouble, the dollar is going to fly well past that 100 level. So, we're going to have to reverse on it. And we thought it was negative, but we're not going to stay on the wrong side, that's for sure. And the momentum that we're looking at here is beginning to change. So you can see the momentum turning negative here in the big break. And now momentum in here almost neutral, but not quite. So we have to see what happens right in here. If the stock market panics and the bond market rallies back up, this will pull back again. So that's the correlations, and we're looking at it. We're going to call the dollar as getting up and testing that 99 area, that resistance, and then failing after that. We're going to guess that the failure comes in a modest way, and we're setting up something more positive. But if it closes up past that $99, it's going to really make a difference with the change in here in this structure. It really makes you wonder about whether or not interest rates are going to spike more to the upside. Really curious when I see that. I can't make a big call in here. The downside momentum in the dollar is disappearing, and this flight into dollars looks like it's really powerful. 5 straight days. You can see those white bars. Very strong when you look at that now. This big negative configuration warning that we had, which was perfect, now you got to wonder if it's now going to create something that's more positive. When I see that, and just got to stay tuned on this one, because I can't give you anything brilliant on this one based on what we're looking at. Look at the bond market. This was a panic. When bonds moved up here to this levels right up here, it was because of the circuit breakers. There was a panic into the bond market. They had to buy something that was inverse to the market. That sent it up. This is so. I think it was up to 193 in the panic on some of the charts, but let's say 190, 122 high, getting down to the bottom of the slim ribbon right now at 172. So almost a 19-point reversal in there as the yields pop from 0.84 up to 1.53, and that is a huge difference, of course, to the dollar. So this is your support zone right in here. But look at the decline. It's sets up to the beginning of April right over here. So if you get a rally into these sell zones, and what we're looking at is a range in here. This is about 182, let's just say right up at the bottom of the sell zone. This support over here is about 171.5. We're going to look at that range this week as a high potential. Based on what I'm seeing, if it rallies up into this zone, it's a sell. I mean, it really should come down again, and very hard. So look for that sell to set up, and look for rallies to fail in this area and come down. I'm looking at 171.5. It could come down over here to 166. So those are significant numbers. Some of the evidence says that the bond market made a major top. The yield lows we saw, they may be tested somewhat. We could get close to them out over here somewhere, because I have lows, I have tests in yield coming in around April 6th and June 22nd. So those would be periods that the bond market could be rallying. And I think a big top is being formed in there, and I want to call that as the sum of the evidence, that the big 40-year bull is ending and a top is being formed. It's likely to be complex. Look for this week to trade inside of this range right over here, with this being a good sell zone, and down over here being down at this level here being more of a buy zone. And that buy zone, I wouldn't be aggressive in it right now. I'd more look for the sell. So that is a look at the bond market. So here's the stock market, SPX. Incredible. I mean, we've talked about the cyclical patterns in here and how they were running pretty steadily at 20 days to this low, 20 days to this low, 20 days to this low. And where are we right now? Well, we're 1, 2, 3, 4, 5, 6, 7, 8, 9, 10th day. That 10th day is a pretty good place to get a rebound, and then another move to the downside. So I'm going to, often when you get into free falls, these cycles shorten up. They shorten up because the capitulations, people run out of stuff to sell, and the bargain hunters come in. So what I believe is that what's going to happen is we're going to trade in a range. If they get up to this area of around 27.32, that would be, to me, about the best I can see on the upside right now, and with a potential up here to this area of about, let's say that's 28.10. Let's just pick 28.10 as the area that makes the most sense in here as an upward target for the near term, and maybe even over coming weeks. And then that would be the area that I think that they're a big sell. So a very big sell over these next several days in here if they get there, and less so out over here, because we'll be looking for maybe potentially 2,900 in that next bounce over there. So right now for the next week, we're again calling for wide ranges. The bottoming not coming for at least a week, probably about, we're going to maybe 7 to 10 trading sessions that we see in here. That means you get rallies that fail and more free falls that come in here, and very likely going to test that level down over there. When I did the big picture analysis, I talked about the supports that are below this on the intermediate and long-term pattern. So if you want to see those, please do watch that video. We're going to call for a lot of swings in here, and trading basically in that range. Momentum, you can see down right over here, and it's been just incredible. A sell signal that comes right at that point on the projection oscillator. And how good was that? I mean, it fell 500 points after that. So incredible. Sell zone works over here. We expect the sell zone to work over here. Let's call a range for this week. Somewhere, let's call it wide, about 350 points. How about 24 and a half down up to about 2,800. So that's 350 points, where we think we could get a range coming in the next week. And that would be all in this process of digesting this big decline with more risks after that. So big swings still here, volatility absolutely crazy, and a very, very good likelihood that much, much lower prices are coming out over the rest of this summer. Bounces should be sold. We're going to keep giving you the sell zones where we think that they should be sold, and that's what we want to do. I'll give you a chance to, certainly as an investor, to find the spots to lighten up on some of your risk, because I know so many investors did not have an opportunity to do that. Not with a 27% decline in 3 weeks off of the top, which is a record. This is a very bad situation, and bounces are coming, and don't believe them, because they just are a very, very low probability when I look at that. That is it. Showed you a ton, didn't I? I hope that you found the information on the Slimulator Momentum Tracker valuable. Do become a member so that you can get that, and level 1 through level 4 all get that. You're in Bitcoin. You might hate me right now as I gave that, but I've been right on that, and I would be concerned. Stock market, well, look for bounces and then don't believe them. That's it. I hope that you found this incredible. I want you to be so careful. It is unbelievably crazy out there. And I'm always wishing you great trading.